In recent months, global markets, Iraqi citizens, and investors abroad have been captivated by a single question. Could Iraq really adjust its exchange rate so that $1 equals just 750 dinars? This speculation follows years of economic reform, central bank policies, and mounting pressure from the public for a stronger national currency. While rumors of an imminent revaluation RV have circulated before, this time the signals appear stronger, with talk of lower denominations, banking reforms, and fiscal stability gaining traction. The figure of 750 IQD per $1 is not random. It represents almost a 50% strengthening of the dinar compared to its current level around 1,300 per dollar. Such a shift would not only improve purchasing power for Iraqi citizens, but also position Iraq among the stronger emerging market currencies. For businesses and households alike, a stronger dinar would make imports cheaper, inflation lower, and salaries more valuable. As of 2025, Iraq's official exchange rate sits near 1,310 dinars per US dollar, though the street or black market rate can vary slightly. This rate reflects years of post-war instability, sanctions, and heavy dependence on oil revenues. In comparison, a shift to 750 would be a historic correction, signaling confidence in Iraq's future. The Central Bank of Iraq (CBI) plays the central role in shaping the dinar's future. Recent reforms include launching new, lower denomination notes to normalize transactions, increasing foreign currency reserves to stabilize the exchange rate, tightening controls on the dollar outflow, ensuring more dinar-based trade. These moves suggest that the CBI is seriously preparing for a major currency shift. The introduction of smaller notes, such as 5, 10, 25, and 50 dinar bills, is seen as one of the clearest indicators of a potential revaluation. Currently, Iraqis often carry thick stacks of large bills for small purchases, a sign of a weakened currency. If lower denominations are widely circulated, it signals that the dinar will hold greater value in daily life, making the 750 target much more realistic. Iraq's wealth rests on its oil. With fifth largest proven oil reserves and expanding export agreements, Iraq generates billions annually. A higher oil price and efficient revenue management give the government confidence to back a stronger currency. However, this dependence also makes the dinar vulnerable to oil price shocks. The question remains, can Iraq build a sustainable economy strong enough to support a 750 dinar exchange rate? Global investors are watching closely. A revaluation could create massive wealth transfers for those holding dinars. Already, speculative buying has risen, with some investors comparing the dinar's potential rise to Kuwait's historic currency recovery after the Gulf War. If Iraq follows through, the dinar could become one of the most profitable emerging market currencies of the decade. For Iraqi families, the shift to 750 dinars would transform daily life. Salaries would stretch further, imported goods would become affordable, and savings in dinars would carry more security. Confidence in the national currency would rise, reducing the over-reliance on US dollars in daily transactions. Simply put, this could mark the beginning of a new economic era for Iraq's people. Of course, the path is not without challenges. Political instability could derail reforms. Corruption remains a major concern. Global oil volatility can affect Iraq's reserves. Sudden revaluation could create inflationary shocks if mismanaged. For Iraq to succeed, the shift must be gradual, well-structured, and coordinated with international financial institutions. Other countries provide lessons for Iraq's journey. Kuwait successfully restored its currency after crisis. Turkey redenominated its lira, removing 6 zeros. Lebanon and Egypt, however, serve as warnings where poor management led to severe currency collapse. Iraq must choose wisely between these examples, aiming to follow Kuwait's path rather than repeating Lebanon's mistakes. With one of the world's largest oil reserves, Iraq's economy is heavily supported by petroleum exports. Rising oil prices and stronger export agreements give Iraq a cushion to consider bold financial moves. A revaluation to 750 would signal confidence that Iraq can manage its economy beyond oil dependency. while still using oil wealth to back its currency. For ordinary Iraqis, a stronger dinar would be like imported goods like electronics, food, and clothing would become more affordable. Savings would feel safer, and dependence on the US dollar for everyday transactions would shrink. In short, a move to 750 dinars would mean real relief for households struggling with inflation. Not all experts agree. Supporters argue that Iraq's economic fundamentals now allow such a shift, citing reforms in oil-backed reserves. Critics, however, warn that sudden revaluation could destabilize prices, cause inflation spikes, or trigger black market chaos if not handled carefully. Some suggest a gradual strengthening rather than an overnight shock. Investors abroad are watching closely. Many recall Kuwait's successful currency rebound after the Gulf War. Some speculate Iraq could follow a similar path, creating huge opportunities for those holding dinars. Yet others caution that Iraq must first stabilize its politics, reduce corruption, and diversify its economy before taking such a leap. The outlook is both promising and cautious. If Iraq successfully strengthens its dinar to 750 per dollar, it would represent not just an economic shift, but a symbol of national renewal. The combination of lower denominations, oil-backed revenues, central bank discipline, and investor confidence makes the goal possible. But the timeline remains uncertain, and Iraq must navigate careful. Speculation about a 750 IQD per $1 exchange rate is more than just financial chatter. It's a reflection of Iraq's ambition to reclaim economic strength. While challenges remain, the signals of reform's strong oil backing and citizen demand for a stronger currency point toward real potential. Whether 2025 is the year of revaluation or simply another step toward it, one thing is clear: the Iraqi dinar is on the move, and the world is watching. Speculation is rising in Iraq's financial markets that the dinar could revalue dramatically, with some predicting a shift to 750 dinars per US dollar. Currently, the official rate stands near 1,310 IQD per dollar. But recent reforms by the Central Bank of Iraq, CBI, have fueled hopes of a stronger currency. The CBI has been building record foreign reserves, introducing lower denomination notes and limiting dollar outflows to push more trade in dinars. Combined with high oil revenues, these steps suggest Iraq is laying the foundation for a bold monetary move. If achieved, a revaluation to 750 would nearly double the currency's strength, giving citizens more purchasing power, lowering import costs, and boosting national confidence. Everyday essentials would become more affordable, and savings would gain real value. For businesses, it could mean cheaper imports and closer ties to international markets. Still, experts are divided. Supporters see Iraq's fundamentals as strong enough for revaluation, while skeptics warn of inflation risks and market instability. If the move is too sudden, whether 2025 delivers this shift or just more gradual strengthening, one in fact is clear: the world is closely watching Iraq's dinar story unfold.